You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Good morning, Quasar Markets Live. I hope everyone's having a great start to your day. 8:30 a.m. here on the East Coast. And let's take a look at the markets. We've got a little bit of a mixed bag here today. Dow Jones right now is the leader in the clubhouse, up 26 basis points headed into the morning. But you can see it's been up and down over, here with a low of around 49,391 that would have us negative on the day. So it's been a little bit of a mixed bag. S&P is up about 13 basis points here. Also, and again, coming sort of off of the highs. We got ADP numbers a little while ago. They were less than stellar. We'll break those down for you in a second, but let's just get through the macro stuff first. Take a look whether we think the markets are risk on or risk off, and tech risk off so far, down about 25 basis points after yesterday's big sell-off across the software giants. The software names are definitely getting hit, continuing to get hit here today. Our look at volatility, yesterday spiked up above 20, right now back down around 17.8. Government shutdown averted. It looks like it is only a 2-week window here when it comes to parts of it. So we do need to get, we have more work to do there, but at least it is reopened. I do see that we're getting some news out of the Middle East that U.S. envoy Witkoff and Iran's foreign minister are going to take part in the talks in Oman. So things may be moving forward there too. So we've got a few things lined up that could lead us north there. With that being said, though, we do also have tweet analysis to worry about all day out of the White House for sure. Rates are also continuing to climb up a little bit, but that is deceiving because yesterday when we were in here, they were at about 4.29. So actually down versus 24 hours ago, but up overnight a little bit. Not really a big tell here. It is still elevated. And what we do see is the dollar holding up pretty well, 74.50 here, 97.50 here, held above that key support level Mr. Flanagan set for us. And as long as it holds above that, we're happy. What's getting a bid again? BigBeat must be very happy this morning. We see silver breaks back above 90 here, trying to make a run towards 91. So we still do see metals are the leader. Metals and energy today are the two sectors that seem to be leading. Gold up about 2.24% back above the $5,000 mark. So again, that shift into gold and silver continuing to take place. On the other side of that, with things cooling down in the Middle East, we do see WTI, Brent, our two major ways we look at oil, both down about 75 basis points, and nat gas down another 1.32%, getting back towards that level. Right now, we're sort of at the neutral spot there, in my opinion, on nat gas. Bitcoin and Ethereum look like they actually were starting to rebound this morning, but that ended pretty quickly, and we're seeing another flush to the downside here. So I had been under the philosophy that we might have been able to start to look at both sides of the trade on Bitcoin and Ethereum, but we're back to basically shorting only in my room. And good morning, speaking of the room, Dr. Ida there. How are you this morning? Hope you're having a great start to your day, bright and early in California. Bitcoin overnight markets, they do point higher. So the Nikkei up about 1.25% in Japan. China is a little weaker. And when we get through today's movers so far in the pre-market, we'll see the Chinese names are under a little bit of pressure here in the U.S. markets this morning. And we do see the European stock market up about 40 basis points so far. Taking a look at the different sectors of the S&P, while we are seeing things down, like I said, the NASDAQ is tech heavy, and what is down? XLK, the technology sector, down about 60 basis points. And we do see consumer staples down slightly. Keep in mind, they exploded yesterday, Walmart becoming a $1 trillion company on the heels of my wife's shopping trips. But yeah, nice, move by Walmart. Costco was up. Defensives yesterday really took the forefront. So they're seeing a little bit of, a reversion trade here this morning. Other sectors that are looking pretty good: materials, XLB up about 65 basis points. Industrials up about 63 basis points. Healthcare has had a pretty good day. We'll get into some of that, but Eli Lilly leading the charge there, up a little over 1%. That is the biggest mover today. And let's start to get into it. Let's get into the winners and the losers so far. Let's take a look at this morning's top gainers. It's been an interesting morning. Earnings have been very much the driver as we look at the different sectors. First thing, SLAB, so Sierra, Lima, Alpha, Bravo, up about 50% now on news that Texas Instruments is looking to purchase the company. So on merger and acquisitions, has Silicon Laboratories moving tremendously to the upside. Good morning there, Mr. Flanagan. You're up bright and early in FLA. I hope everything is well. Another sector you got to keep your eye on today is the solar sector. We do see Enphase Energy here had some really strong earnings, has them up now 24%. They did have a lot to say. Their adjusted earnings came in at 71 cents a share late Tuesday. Revenue did drop 10% from a year ago to $343 million. Analysts were expecting a lower EPS and lower revenue. So even though they were down year over year, and we know a lot of that has to do with the reduction of tax credits here in the United States, people seem to be happy with them. They do expect revenue of $270 million to $300 million for the current quarter, and they're well above that spot right now with $269 million in. We do know, solar stocks have been under a lot of pressure as President Trump cut most of those clean energy subsidies, but they are starting to rebound. And Enphase said on Tuesday that the sell-through demand for its products climbed 21% in the fourth quarter compared to a year ago. It's the strongest demand they've seen in over 2 years. So it looks like, the market's, figuring in now what is it worth, or consumers are deciding, okay, these tax credits aren't coming back at least for another 3 years. So if we're going to be solar buyers, are we getting in there now? Other names to keep an eye on with that being the case would be Sunrun, RUN, Next Power, NXT. You can see NXT here on the leaderboard already. They're going to be names that could move up in sympathy to keep an eye on there. But solar is moving in the upward direction. And I even saw on some of the micro caps, they're moving to the upside also. There, one of the other big early morning risers is Light, LITE, which is Lumentium Holdings, fiber optics. They pointed to the amount of growth in the data centers pushing their business tremendously to the top. We can see that they had about a 2% revenue beat at 665 million for the quarter, and they had about an 18.5% beat on their EPS, coming in at 1.67. So nice little move to the upside there. Other ones that we're keeping an eye on today: Palantir, PLTR, which we know came through earnings yesterday, up about 7, giving back about 1.5% of that here today. So the question will be, can it hold up, move back above its 200-day moving average, or was that all we had to see from them? I mentioned healthcare. Eli Lilly up 8.42%. And I will say, when it comes to healthcare, we're going to talk about both of them. It's sort of been a tale of two stories. On the positive side, Eli Lilly. So let's get into their earnings here. They posted adjusted earnings of about $7.54 a share for the fourth quarter, outstripping the analyst expectations at about $6.90 or so. Quarterly revenue came in at $19.3 billion, and it marked a 43% increase from the prior year. Strength in the quarter was largely driven by volume growth on their blockbuster drugs, Mounjaro and Zepbound. For the full year, Eli Lilly sees revenue to come in between 80 to 83 billion. So that is above what the analysts were eyeing there. And they're looking to come in above analyst expectations on EPS. In fact, their lower range, the lowest of their range at 33.50, is above what Wall Street was already looking for. So that has them up about 8.71%. And it showed that Eli Lilly is definitely regarded probably as the leader in the market for weight loss drugs. It sells its blockbuster drug tirzepatide under the brand name Mounjaro for type 2 diabetes and Zepbound for chronic weight management. Their Mounjaro revenue more than doubled to 7.4 billion. Zepbound revenue grew from 1.9 billion last year to 4.3 billion this year. So that was the positive. They did say they're facing intensifying competition as their markets are seeing some of the rivals come in and attempt to do it. The other problem they pointed to, or their other competitive hurdle to keep in mind, is while they are developing their own pill version of the GP1s, they seem to be a little bit behind maybe some of the others there. So Eli Lilly, almost at 1,100 here, and quite honestly, looks like with a little bit of strength on the cash open, could try to make a move to an all-time high. On the other side of that trade, in my biggest laggards here, it was here. Maybe it shut up. It did not. Novo Nordisk. So on the other side of this, Novo Nordisk came in after the markets closed in Europe yesterday. They said that their operating profit decreased 1%. The outcome was in line with company guidance. They report in Danish krones, although let's see, this will put it into. They were looking for 12.13 billion top line revenue. They beat that by about 3%, and they had EPS of about 95 cents a share, above the street there. But what's driving it down? Their CEO was part of it. He was pretty negative. He made it clear that they were not out of the woods yet, I think is what he said. There would be more pain before it got good. They gave a disappointing full year outlook. They do make the popular weight loss and diabetes drugs Wegovy and Ozempic. They expect their sales to decline between 5 to 13%. And that would be a reversal of what was 10% sales growth last year. They do expect sales to rise internationally as Wegovy expands into more markets. U.S. sales, though, will likely decline, the company said. Aside from the competitive pressure from Eli Lilly, there are other factors in play, which means tariffs. Reduced obesity coverage in Medicaid is also another thing they pointed to. While state Medicaid programs are required to cover most drugs approved by the FDA, federal law allows them to choose whether to cover weight loss drugs. So insurance coverage for the GLP-1 medications has been scant in the past. So we'll see if that can get moved around, but it definitely has them under a lot of pressure. Also, talking about a tale of two stories again. Let's start on the good side. SMCI, nice little earnings report here. Stock up about 10%. It had been up 11%, so it's pulling back a little bit here. This is a company that's been beaten down since about, well, definitely since October, but quite honestly, going back here to March of 2024, when they were trading at $122, now down around $30. They reported better than expected earnings and revenue, helping investors to look past the fact that they did say there will be some tighter margins involved. They reported adjusted earnings for its fiscal second quarter of about 69 cents per share. Revenue did surge 123% from a year ago. Analysts were expecting earnings of 49 cents a share, so a nice 20-cent beat there is good. Their guidance also looks solid moving forward. The company expects adjusted earnings of about 60 cents in the current quarter. So again, beating estimates, beating last year, moving in the right directions. They didn't really give much else. I'm trying to see if I saw anything else that really mattered. Not really. They said that their margin weakness was due to customer mix, tariffs, and shortage of key components, especially memory products. So keep in mind, we've been talking about those memory products, Seagate, SanDisk, some of those others. Another channel check that sort of talked about the fact that they can't get all the memory that they want or need right now. So that has them in that direction. Interesting segment that's picking up today. MGM, Caesars, gambling seems to be back. Both of those up over 5% for Caesars. MGM up 11% here. This was after they said that they expect to see higher 2026 profits. So that is what they're looking at there. One of the names that was up in the pre-market now has turned around is Take-Two Interactive. This takes it right off of my list here of things to talk about that were sort of breaking the trend, because we're going to talk about all the software names that are under pressure after their earnings. And they did have an earnings beat of top line revenue and a 50% beat on their EPS, had them up, as you can see, on the news to 227, up about $10 from where they closed yesterday, and now negative $5. So the markets obviously did not like the CEO or the earnings call as much as they liked the original numbers. And good morning, Zora. Hope you're having a fine day there in Oregon. And thank you to everyone tuning in. We've broken past 200 live viewers here. I really appreciate you all. If you could do me a huge favor and give us a follow, a like, share the feed. All those things help with the algorithm. We would really appreciate that. It definitely helps. Give me 1 second. Other things we were looking at this morning that are moving up or down, like I said, software names are some of the things under the most pressure. INTA, Intap Inc., down about 18% here after their earnings. So moving to the downside again. Oh, and I didn't talk enough or even get into AMD here. So AMD definitely got hit here, down about 12% since their earnings came out yesterday afternoon. They have been one of the market's top performers over the last 6 months, outpacing their rival Nvidia. This is, sort of the second biggest guy out in that sector. It was also up more than 40% from its early October close heading into that release. And a lot of that due to their partnership with OpenAI to deploy their chips in the next generation GPUs. But from that lofty position, investors weren't in the mood to hear anything but terrific news, and that's not what they get. The CEO, who has guided AMD through a challenging period and has it, trying to incrementally close the gap on Nvidia, said it's still going to be a struggle to bridge the gap between her short-term goals and her longer-term projections, including her forecast of tens of billions in annual AI revenue. So basically kicking the can down the road a little bit doesn't have people happy with the AMD this morning, down over 10%. Another one there is on the bad side, Chipotle. I don't think that's any surprise personally. They have been under pressure again, if you look at CMG, it's been sort of a downturn since June of 2024. So them and Novo Nordisk have had a pretty similar run since the end of COVID. They are down about 4.5% here. They did say that same-store sales were down. Margins were being compressed. The only sort of positive they have, or the way they're going to attack the market, from what I could see, was that they're calling them protein cups. They're going to do smaller portions of mainly their proteins, the steak, chicken, pork, and try to attract a health conscious crowd that way. We'll see if that gives it any kind of, movement. I don't necessarily think it does, but hey, you never know. You never know which way it comes. We started to talk about a little bit about the software shocks that hit the system yesterday. Most of that, and we'll talk with BigBeat more about it, was after Anthropic announced that they are going to release products that are going to help with legal tools for its next AI assistant. It caused some narrow selling in Thomson Reuters, LegalZoom, and other companies in the software sector. So, again, this disruption is not a surprise. BigBeat and I have been talking about it for the last 12 to 18 months. But, whether it's Salesforce, SAP, Oracle, Adobe, ServiceNow, all of them have been hit very hard so far this year and over the past few months, because of worries about how AI will upend their business models. It started really with a lot of these educational companies, right? Chegg was one, CHEGG, that, has just been destroyed as people use AI for that solution, right? So these are the companies that are going to have to reinvent themselves, or to prove that they've built AI into their systems that make them have a moat, some sort of defensive here. I will say the pain wasn't just limited either to those companies, the software companies, but it also hit some of the folks that finance them. So Blackstone, down about 5% yesterday. Also, Apollo was down. And they were down about 5%. Also, Blue Owl Capital, Aries, all of them down. So, with software, with technology accounting for 25% of some of these companies' holdings, you can see that they're going to be under pressure also. So it's not just the software companies. it's going channel check to the folks that, fund those software companies. So we're making it down the second level there. That's interesting to see already. So that is starting to move to the other side. Uber, since I put my notes together, has had earnings released this morning. They are up about 1.69. They posted adjusted earnings of 71 cents for the fourth quarter, below the analyst estimates of 85 cents. The stock had moved down. Now it is moving up. Part of that, if I had to guess, is that the CEO in the call said that he sees robotaxis as a multi-trillion-dollar industry. So I would think that was what has Uber moving to the upside so far today. Sorry, just trying to see what they were saying there. That's a lot of talk on Warsh's approval or non-approval of the Senate. So we'll see what happens there. We are about 35 minutes from the open. Our first look here at advanced decline, something we use to gauge market breadth. It's the amount of stocks that are right now trading in the green or the red. And right now we see about 1,000 stocks more trading in the green than the red. So again, risk on seems to be, not so much broadly based, but picking winners and losers in each of the different sectors here. I did mention, I forgot to get into other laggards here today that we want to keep an eye on, is definitely the Chinese names. They are under a little bit of pressure today, with Baidu down about 2.5%, being down 2.5% yesterday. Also, Bilibili down about 7% in the last 2 days. So we do see some Chinese names also that are showing up in the laggards list. Let's take a quick look, see if anything else is popping here. MGM continuing to move to the upside, now up 10.77%. Another earnings beat, JCI, Johnson Controls International, had some strong earnings. They are up about 7 and almost 8% here on that news. Same thing, Emerson Electric had strong earnings today. So we are seeing some of the electronic technology names getting a run. Also, Sunrun, like we talked about on the better than expected earnings from Enphase, moving up. On the retail side, where Chipotle moving down, we do see Five Below, my 5-year-old's favorite store, moving to the upside. Some of the mining companies are also moving up here this morning. We see HYMC up about 3%, Newmont Corporation up 2.53%, SSR Mining up about 2.38%. So as gold and silver continue to rebound, there is still strength in the non-energy mineral section. There a little bit of strength in the communication sector today too. Vodafone, T-Mobile, both up almost 3% in the pre-market. Just trying to see if anything else is sticking out. That's really it. You can see more of the we do have gas energy names also moving up here today. Phillips 66 up about 1.5%. We see Devon Energy up about 1.51%. GE Verona up about 1.63%. So we've definitely got some winners across the different sectors. Coca-Cola up about 1.2%, most likely on yesterday's strong earnings report and analyst call with Pepsi. So that's what we're looking at there for sure. On the bottom side, like we said, into app loving, a lot of the software names getting hit pretty hard here. AMD still down almost 10% after their earnings disappointed. Chipotle down about 4% after their earnings disappointed. We did have Black & Decker earnings came in. They're down about 4% on less than expected earnings. So earnings definitely weighing negatively on some of the markets. It is picking the winners and losers. And speaking of winners, Mr. Silver himself, I'm expecting him to come in one day wearing a full silver suit here. Let's get his intro going and get him in here. Big Beat himself.
When markets move, Stephen E. Orr takes the chair. From the White House to Wall Street, he's spent decades at the intersection of policy, markets, and real capital. And he's seen firsthand how institutions use data behind closed doors. Now, as founder of Quasar Markets, his mission is to pull those signals into the open so everyone can see what really moves the markets. This is Stephen E. Orr, Big Beat on Wall Street. Let's filter the future live.
Big Beat, how are you doing today, my friend?
Good morning, Howard. Look, the markets are going exactly as I said that they would. Silver still pushing higher. I mean, look, I get it. I sold a little bit of silver yesterday. I sold most of it. I bought Ethereum on that. Good morning, Zora. How about it? Look, the markets are doing exactly what I said. You saw the we used to talk about this yesterday. AMD. Their numbers came out yesterday. Good, but they weren't great, and there's a problem, right? PayPal problems, and it's all based on one thing: AI. The whole thing is because we were told by the mainstream media that AI was dead; it wasn't going anywhere. That all this money that Mark Zuckerberg and Elon Musk and Jeff Bezos are spending it on it's going to waste. It's not. What it's going to do is it's replacing people, and we're seeing that in numbers already. And it's going to get worse. And will there be a backlash in law? Probably a little bit. Probably see that. I'm expecting that. I'm already in talks now. But it didn't go saw the progress of technology. It's just not. Data centers. The president says he wants data centers. Right here it is. Amazon just now saying that they're discussing special access to OpenAI. It's core to the information, so we already know that that's probably not credible, but I'll post it anyway just in case. Could be credible, but that's exactly what I'm saying, right? That AI HR people gone, graphic designers gone. I mean, CRM software gone. I mean, it's healthcare could be possibly healthcare providers. I heard the other day someone says, well, it won't replace plumbing, the plumbers, because robots can't get in behind these bullshit. Sorry, I should have said that. It's gonna happen.
Yeah, they'll figure it out. Yeah, robots it might have a moat. And what it is, Steve, things have bigger moats, right? Certain things have bigger moats than others do.
Right.
And that's the case. Is if you are a believer in what Mr. Musk is telling us, eventually the robots will be doing all the work, right? And Uber talked about it today. Their CEO said robotaxis are a multi-trillion-dollar business.
Right. Think about
it. You said that. You're not going to have a car. You'll just call a car. It will come pick you up and take you where you go. You were on the one in Vegas. Those things are pretty cool, So, yeah, we've been talking about it here. You nailed the silver trade. Without a doubt, we've been negative on software for a long time. We've been negative on Chipotle for a long time. Yeah. And a lot of these things are sort of playing out. It's, again, some of this is common sense, right? You keep talking about
Eli Lilly, massive earnings on Zepbound. I've been telling everybody, Zepbound. Manjaro is a hot company. I mean, it's super good. It works great. People are using it. I mean, everybody. I mean, I got friends all over the place just using it, and they can't wait for the pill to come out. Right.
That's where they did. That was the only weak thing I saw on their report is they are behind the others on the pill. They made it clear.
I can't wait for the pill to come out. Yeah, you're right. I mean,
and what I was going to ask you though, Steve, is this this is U.S. versus the world, right? Because Novo Nordisk had their that's number 2, right? In that game, so to speak, they had their earnings terrible. And they made it clear that they're losing in the U.S. market. So it does look like some of the president's stuff might be working for some of these U.S. companies.
Yes. It's interesting. I was listening to another company talking about, they were wrong about software. They were big on software and the narrative changed, right? We knew this. AI is telling you that what's going on in software. If you're not paying attention and you're just looking at your charts, you're not getting it, right? Because you're not understanding exactly what's going on behind the scenes. And I always tell people it's common sense. Follow the money. If Elon is spending billions. If Mark Zuckerberg is spending billions, yeah, I get it. He spent billions on, and people are going to say, oh, well, what about the metaverse? He changed the name of the company Meta for that very reason. It ain't dead. It's just not the priority right now because there's other priorities right now. Metaverse, you will live in the metaverse. You already do primarily. It's a little bit, I would say it's more of a split difference right now that how we live, but your glasses, I mean, I can't wait for my glasses to tell me things. So I don't have to like always have the new AirPods that are coming out in the spring are going to have microphones in them. And they're going to have, so that you can talk to it and you'll be able to see it, and cameras so that you'll be able to see what you're seeing and understand what, and it's like, it's going to all work together so that in the new phone, understand that not the fold, the new phone that Apple's working on, the one that's like the kind of the clammy thing it's going to be part of your life. And the pen, it's going to be on side of your shirt. We know it's wearables. If they're spending billions of dollars on these products, we may or may not like them, but we will accept them and we will use them eventually. And guess what? It'll be another $1 trillion idea. So software is not going to be part of the future. Software, we're going to be living in this mainframe. The matrix is coming, but no, we know. And let's put it this way, Howard. We know that we saw, and there is a little bit, and I would say a little bit of a controversy around it, but the Molt book. One guy didn't even write one line of code. He just said, create a system where the AIs take over and create their own place. And they built their own church. The AIs built a church inside Molt book, right? And then the Molt book is now asking whether or not we even need humans on the earth, right? Yes, we have a kill switch for all this. Oh, I'm scared. Don't get scared. It's not going to get out and go kill us all. It's not Terminator yet. In fact, it's the opposite of Terminator, right? They're actually, Terminator was the other way around. But it's what I am saying is we need to follow the money. And when I follow the money, I look at the 10Ks and 10Qs. Biotech stocks, where is that going? I saw this. In Lilly, it was about weight loss drugs. And I liked Lilly at 700 and 600. It's 1,100 now, right? That's why it's important to understand. You're looking again at silver at what is it now? $92 an ounce, going right back up. It doesn't make any sense again. It didn't make sense at 121, right? So guess what we're going to do? At some point we're going to short it again because it's going to happen again, right? These numbers are not making sense. So when things don't make sense, I'm usually on the other side of that trade.
Absolutely, you are. You unpacked a lot there, BigBeat. The markets are definitely trying to digest everything today. It's definitely a stock picker's market over the last 48 hours for sure as these earnings come. We got the big one today is Google. What are you thinking there? I mean, they are the AI one. They are the AI story right now. One of them.
I'm sorry, which one again, Harold?
Google.
Oh,
small company.
I'll tell you the company that I like more than anything of all of it is Amazon, with Claude and Anthropic.
That's tomorrow.
Yeah, and that's tomorrow. I really want to see those numbers. I get it. Gemini 3 is looking really good. I have been using it. I do like Grok when it comes to making video. You can see them on our own Twitter feeds. You can see how it's working. Much better. People are like, how are you getting this done so fast? I don't have a graphic designer anymore.
Yeah, it does it for you.
Don't have a PR team anymore, right? Because I don't need them. And that's what's happening. And I know that they're gonna go out and say, oh, you gotta have this, you gotta have that, no, you really don't. And it ain't software anymore, it's just AI doing it for you, right? And AI is customizing it for you. I mean, when you say customization, when I hear people say, well, we're doing agentic AI with our company, it's already built in. When you're saying workflow, it's already built into the AIs. The AIs are now building themselves. It's actually fixing itself, it's healing itself. The AIs themselves are fixing themselves.
And so, Steve, with you saying that, Amazon, I see just hitting the ticker, has released their new AI product. They announced that Alexa Plus is available to everyone in the U.S. almost a full year after it launched a revamped version of its digital assistant. Are you going to be playing around with Alexa, see how she's doing?
I already have. I have the pre-version. I already been playing with it. I played with it 3 weeks ago. I like it. It's a little more conversational, maybe a little more than I'm used to, because I like factual based. You say me, what's the weather? Give me the weather. What's the date? Give me the date. What's time? Give me the time. but like I said, eventually it'll be a pin on your shirt, and it'll automatically know. I look down at my watch. I know what time it is. It's just the speed of it. How efficient can it make me? But when I don't like it when Alexa goes, hey, there's a news thing on sale if you like, and it's a little cheaper. Do you want to buy it today? No, I don't. I don't need it, right? Eventually, it'll say, you know what? You're getting low. Eventually, do you need some milk? We're going to send it to you. So all of a sudden, now, I had a nice chat with my friend, the godfather of technical analysis, Ralph Acampora, who says one thing, right? It's a follow the charts, follow the data, follow what the flow is. And the flow right now is telling me Dow theory, right? He's saying Dow theory still works. And Dow theory, one of the pieces of that is watch the transportation sector. And the transportation sector hit another new high. Think of it like FedEx and UPS and trains and trucks. They're hitting new highs because people are lazy, and they're getting lazier, but they're getting smarter and smarter, but they're getting lazier. And because of that, the trains and trucks, but eventually trains and trucks and drones will be delivering your things to your house. So you won't even need a delivery person. You don't believe me? Go spend time in an Amazon warehouse. Steve Flanagan says, step aboard the Nebuchadnezzar Matrix fans. Listen, he's not wrong. I don't look, regardless of what I think or what Howard thinks, it's happening. And I always say, you know what? If you don't like the world you're living in, you're living in the world of Elon Musk and Mark Zuckerberg and Jeff Bezos, because they're the ones writing the software and they're the ones creating the world that we're living in. You don't like it? Go change it. And I am. So now do I dislike it or do I like it? I like technology. I like how it makes me more efficient, because everybody here knows I work 24/7. I don't stop. Most of you don't know I've been sick all week and I'm still here. So it's like kaboom, kaboom, kaboom. How do I get more efficient? So this makes me more efficient, especially when I look at AI.
Yep, absolutely. Well, staying on that, Steve, right into the jobs data, the U.S. added 22,000 jobs. They were expected to add 45,000. December, 37,000. Numbers not good. I mean, we've talked to Paul over at Higher Capital. He said that it's not good from what he sees. One of the largest, management firms out there when it comes to, hiring.
So the numbers came in on ADP, came in at healthcare and financial activities and construction, professional and business. So let me get these numbers right so everybody understands. So the private sector got 22,000 jobs versus the 48 expected, as Howard just said. They revised December up to 37,000. So there was a bump in, but that's seasonal, right? We already know that the holidays. So where did those numbers come from? Healthcare was 74,000. And I think there was a problem here. We got a massive problem. This administration, I don't want to get into it, but viruses are heavy. Measles are heavy. Flu is heavy. People are antivirus, getting those vaccines. So guess what? Boom. So healthcare professionals up. Financial activities up 14,000. And construction up 9,000. Guess who lost? Professional and business services.
Right.
57,000 jobs were lost in the business and professional services. And manufacturing, which is a quote supposedly where the president wants, lost another 8,000. And job losses have come in every month since March of 2024. So it's pretty much the president taking over. So job losses are picking up, not gaining. Manufacturing is not gaining. Yeah, I know. I did see the manufacturing numbers at 52. We know why now. There's no other reason. And look, and the biggest problem about this is, as rates still getting sticky and pushing up, the housing market. So I made a big tweet this morning on it about how the housing market, people aren't buying houses again.
And they had record number of backing out of deals last month.
Right. It's now becoming a buyer's market again. They're backing out because they're scared of their jobs. It's not about they're lowering their rates anymore. It's about scared of their jobs now. So now that narrative is flipped, which was what we've talked about since the beginning. So all of these narratives that you and I have talked about, Howard, are coming to fruition. And I think we need to understand how to invest. And I've gotten very defensive, and I moved a lot of my money out of the United States because I don't, regardless, and I can't wait till Flanagan gets in here. the sell America narrative has really taken hold overseas, not here in the United States, but it definitely has taken hold overseas, as international companies have literally been dumping U.S. Securities and have been buying foreign securities, of which I have already been a part of, right? We're hearing now that Trump is taking out 700 ICE out of Minnesota, looks like, possibly Minneapolis.
That's a good start.
It's a good start. Maybe all of them should go. All right. Yeah.
And Steve, before I go here in a little bit, I did want to bring up and ask you about, a different segment, the business development companies. Your Blackstones, your Apollos, are you worried about Ares? You worried about any of these guys? I mean, it seems to be one after another. In other words, they're very heavy into these software companies with their fundings, right? And they're also already on the outs about private credit and, defaults. And if we're getting a tightening there, they're the ones, we know Blue Owl got hit with the bankruptcy of the car company last year. Is this the start of crack? Should we be looking more at these in that area?
Ares Management Capital is, we should be looking at it very tightly because they do pay a nice dividend, 3.4%. Companies like that, you do have to keep your eye on. If you look at the 52-week high there, for those of you who don't know, it's ARES, sorry, being down 10%. The stock it's pretty much a $200 stock, sitting now at 130, 160. You need to be worried, but they are too big to fail. And I hate using that term in a lot of ways, but they are too big to fail. So if they do fail, we've got a bigger problem than you think. And we will have a Herbert Hoover as president. I don't think that's the case yet. So
okay. You had me on edge there, BigBeat. You had me on edge. But I did want to hit you with that one for sure.
Yeah, you're right.
I do think it's important to keep an eye on that. There's definitely, wherever we've seen smoke in the past, that has been an issue. Steve, are you surprised that Marin stepped down from his White House post? Do you think he's going to get
I'm very proud of him for doing that. It's time. Having a foothold in the White House and it being a foothold in the governor's, being a governor of the Fed, that's bad. It's really bad optics. It's bad all the way around. In fact, the guy probably should be brought up in charges for that. Seriously, that's really bad. So I'm very glad he did that. That's a smart move. There should be a separation, and it was the optics of that was very, very bad at the very, very least. So very good for Marin to do that. A smart move.
Awesome. Yeah, I agree. I think it was the right thing to do there. So that is a good one. Steve, those were the big things I had for you. We talked. The only other thing I really saw was AMD versus SMCI, and one has been the high flyer, one has been sort of the bottom feeder in the chip sector. Are you buying AMD down 10%? Are you a buyer? Are you still a seller? And on SMCI, do you believe the earnings, and can we start to invest in this one again?
I'm looking at SMCI. And I don't know that I can invest in supermicro computers. I mean, I know that there's this narrative around Micron MU. I said it yesterday that I didn't like it, and Micron down 4% yesterday, and down another 2% here in pre-market. The narrative around this NAND, SMCI, Taiwan Semi, TMSC, Taiwan Semi is another one that you got to think about. I don't know, because I'm not sure that NAND is the answer here. As quickly as we're building new batteries, as quickly as we're building new, the ability to build new and better ways of storing data. I know that the narrative was around SanDisk, SNDK, and now down almost 5% this morning, as we're starting to wake up to realization that maybe the future is faster than they think it is. And I think SNDK may get slaughtered here in the next few days. So there is this narrative that, but the narrative, Wolf just called NVIDIA attractive. I agree with that. That's one that I do like. I think NVIDIA has gotten beaten up enough. But if you want to talk about any of the stocks, I do like NVIDIA here.
Awesome. I love it. Well, I see someone getting ready to enter the room here. Let's bring him in and see what's going on. Mr. Flanagan, how you feeling this morning, my friend?
I'm feeling great. I'm loving the weather's starting to warm up from one day of a cold snap. And my buddies up in New York are freezing right now. So
welcome to Gatorland, Steve Flanagan.
Hey,
I still have about a foot of snow in my yard.
What's that, Steve?
U.S. and India have a trade deal. Here we go.
Yeah, you were right. You were dead right on that. That would happen eventually. Talk to us a little bit, Steve. You nailed the Dixie here, the dollar. Are you still long the dollar?
Still long the dollar, specifically against the yen as we move into Sunday's election. While recent polls are showing the LDP and the JIP, their coalition partner, they should come away with a very strong majority, and that would be a Japan first type of result. I probably will exit that position on Friday, but right now the risk is that maybe they don't get the majority, and this snap election flies in their face, a la France and other countries.
France, right?
So, and I'm long dollar Canada because I really think that Canada's between a rock and a hard place. They're not going to be able to deliver economic unemployment's at 6.8%. Their economy stalling. GDP is at 0.4%. 1.4% is expected for 26, while the United States, their neighbor, is shooting at 5%. The trade risks are huge, with 70% of the Canada trade exports got to do with the U.S., and that's about 20 to 25% of its GDP. So I'm really liking dollar Canada long. I think we can have a nice shot up at the 140 zone. So those are my $2 longs. I've exited the euro, exited my sterling, the shorts in the euro and the short in the pound, because they have their central bank meetings tomorrow. Having said that, look at the Eurozone here with an expectation, their rates at 2%, expected to do nothing. Meanwhile, their economy is growing at 0.3. And France just announced its CPI for January minus 0.4. Okay, well, here's a terminology that I think the ECB should start toying with. What happens since Eurozone inflation, as that just came out, is at 1.7%, undershooting the 2% goal? Can we start talking about the Eurozone moving into deflation? Wow.
Whoa, deflation. That's a big one there. Guys, I do have to step away. I will be watching you. Thank you, everybody, for everything, and I'll see you tomorrow morning.
Yeah, Steve, look, you and I talked about it in regards to this trade war that's going on. I mean, Canada just said, screw the United States, we'll go with China, right?
Steve, for the western part of Canada, a trade deal with China for Canada makes a lot of sense. I mean, it's a huge amount of their population. Remember, when Hong Kong was sent back to China, I believe, I forget the year, but amongst the UK colonial nations, they allowed free immigration. And so a good part, a very strong move into Canada from Hong Kong resulted. But Canada, in making any gestures towards China and allowing then Chinese goods to work their way in through USMCA into the United States would be a serious mistake. Canada has everything to lose and little to gain.
Well, here's the thing: when I'm asked, name me the countries in North America.
Well, Canada, Mexico, and United States.
Right. But the truth of it is that there are quite a few countries that are in North America. And I'm going to have to pull them all up. It's Bahamas, Barbados, Belize, Canada, Costa Rica, Cuba, Dominica, DR, El Salvador, Jamaica, Mexico, St. Kitts, St. Lucia, Trinidad, Tobago. There's quite a few countries there, not just the United States, Mexico.
Quite a few, Steve, yeah.
Right. So why are they not involved in these trade deals? Why are we making these? Why is our trade rep not paying attention to the broader area, geographical area, and not looking at it from a perspective? Okay, so for example, I love rum from the Caribbean. We look like Cuba's going to be taken over by the United States probably in the next month or two. There seems to be this America first attitude, yet the world is starting to isolate against other countries. Am I wrong here, Steve?
Steve, there's a general narrative out there, the Sell America narrative. It's becoming a little bit entrenched, but
okay.
I don't deny that. But as far as let's deal with the Caribbean, or let's deal with all the countries you just mentioned, each and every one of them benefits massively from tourism with the United States.
Right.
So will the U.S., expand USMCA? I don't know, Steve. That's a great idea. I hope people are listening to include all these other nations. But I'm not so certain that you'd want to upset that, because what do some of these nations offer in forms of goods and services to the United States? I think that the relationship right now is kind of a one-way, which, has been very much the United States policy over the last 30, 40 years. They benefit from the U.S. We're not really looking or expecting to benefit from them.
Right.
But maintaining the sphere of influence is more important.
All right, let's get to it. I'm going to pull up some charts here. I'm going to keep our eye, because I know that the market's about to open up here in about 2 minutes. I will bring up some charts so that we can keep our eye on the market. I have brought up, let me see if I can do this quickly. There we go. I am bringing up the silver chart here, 91.34. I will bring up the Qs so that we can keep our eye on the Qs. Yeah, sorry if my charts are not quite your charts with all your only. I have 57 indicators on my charts on purpose because I know how to read them fast, but it doesn't look good on this Q series here. Looks like we might slip a little bit here in the next few days. We're starting to see a little bit of that Q now, 614 now, 615 right on the handle there. We got about looks like 50 seconds here now to the open. We'll keep our eye right here. Bitcoin holding the 75,000 right above the handle there, and Ethereum slipping a little bit below the 2,200 handle. I'm in at 21.85. That's where I bought yesterday on Ethereum, so I'm still long. I'm just going to stay long on that. I know it popped up pretty good yesterday, but I want to stay long. Here we go. I'm going to bring this down to a 5-second chart so we can keep it up in real time. All right, here we go. We've got about 30 seconds now here to the open. Steve, looking at this, any stocks you like, any companies, any sectors that you're interested in right now?
Steve, I'm still in tech. You mentioned the video. I think, it's just riding along the bottom here, waiting for a piece of news to come out. I think that the United States tech sector, certain areas are doing well. Some are getting beaten up pretty good. Look at AMD. I mean, not bad earnings, but enough to get a good selling wave behind it. Yep. But this is kind of standard now, right? You release good earnings and everybody hammers it and goes for the weak side.
I agree, and I agree with you on this. I have put an order in for NVIDIA. I was going to wait until the open to see where we were with NVIDIA. I have now bought some shares of NVIDIA down here, so I do like NVIDIA. I'm not just some shares. I've gone somewhat heavy here, but not too concerned about it. As it's Q's now 613.41. I think there'll be some buyers stepping in here. I'll get you the exact pricing. I did go at market here, so I'll tell you that. Looking at this market here, Steve, it seems pretty quiet here.
It should be quiet, Steve. You've got a lot of things on the agenda, meaning central banks, Europe and the B of E, England. I think right now the U.S. markets are digesting two main things. One, the new Fed chair that's been proposed. Does he get nominated? Two, Fed Moran saying that stronger growth does not mean higher rates. Yep. These are very positive. Rates are not going to collapse. You may see 3%. But that's going to be considered a good thing. And then ISM, manufacturing now has hit the highest since 2022. New orders were up, I think, very sharply. I think that these are positive signs. I'd like to see a couple of months of this rather than a one-off, which could be skewed. But there's a lot of positives moving in. So I do believe that the U.S. markets are basing. I think we're still in a very highly volatile period of time through February and March.
Yeah.
But I'm looking for opportunities where things get overextended, such as an AMD.
Yeah, and the narrative has changed here a little bit. Software is dying and AI. Oh, but last month the AI was dead in the water. We're not doing AI. It's too much.
Yeah, that's, and then all of a sudden something's going to come out, and that whole narrative goes out the window, and everybody's got themselves behind the curve. You've got to be selective in your companies, in your approach, because, like certain companies that aren't making money, SoundHound and things like that, or in the some other sectors, if they're not making money, these are very subject to getting hammered in this marketplace. But those that are making money, Google is tomorrow, I believe, or is it today or tomorrow on earnings, and I think that's a significant one to be watching. It's been behind the curve. Watch out for a big catch up there, things like that. That's what I'm looking at, Steve. Opportunities right now. I want to stay with my tech-centric investing.
Okay, you like the tech side here. I like it. I like it a lot. I think you're right.
And energy.
Energy, yeah, of course, energy is still pushing here. 178.05 now, back up on NVIDIA. So the dip on the
Bless you, Steve. One thing I would point out to the viewers is a little bit of a shock into those tectonic plates under the financial markets was RBA, Reserve Bank of Australia, raised interest rates 0.25% to 3.85. Now, that's the first, we call them major country out there to raise interest rates. Inflation was the key reason. The Australian dollar is always considered a commodity-based type currency, and we do know what's copper, gold, silver, and things like that, iron ore, have all moved, sharply to the upside. So their inflation has spiked to 3.4% from 3.2%, but their GDP is still running at only 1.1%. Unemployment, 5.1%. It's the, unemployment was 4.1%. So that's considered somewhat strong. So, Australia's got this situation with inflation perking up, unemployment getting strong, perhaps some good fundamental reasons to hold on interest rates, but they decided to go with a raise. I think in hindsight, that may work against them. Why I bring that up is because Bank of England and ECB coming, I don't expect they're not going to raise.
No.
But we do know the U.S. is on hold right now and data dependent. So, there might be a good reason to say the world may just pause here on interest rates.
And yet I look over the interest rates. I look at 10-year now, 4.284. All those cuts that we had, nothing happened. It right back up.
Yeah, that's one, Steve, you got to be real careful for. I know the bond market, the vigilantes and everything, they like to claim that they run a lot, but I think that that they're missing the big point. You want to be buying, the 10-year, because rates are going down there. They're not going to stay elevated here, and any move up is an opportunity to lock in a higher rate of return if you don't like to play in equities or in some of the other more volatile markets.
Steve, I'm looking at NVIDIA that I bought earlier this morning. Went fairly heavy here. Nice little move there on NVIDIA. For those of you who are paying attention, listening to me.
Steve, when you look at a chart of that, you've had this move down and it's a flat line within, a few points. These are great opportunities, when you see
I took that profit off on NVIDIA there. So kaboom.
Yeah. Lock it in, Steve. Make it, keep it. That's my theory.
Yeah. Oh, look at that. I'm at 179.19. So 177.92 to 179.19. A pretty heavy run there. So again, another win here. We were in and out like the wind, and that was where I thought you could see that line that I'd set up there, right, almost to that line. And look at that sell, almost beautiful. That's why I have all these lines and charts. So that line right there has told me where we were going to. So nice little move there this morning.
Gee, that worked out beautiful. Nice play.
Thank you. Well, 35 years doing it.
Yeah, exactly. We need more details out there, and I think that's why you're going into the sideways. Whenever you go sideways, the bottom can slip out, and then you can get these spikes right back up. But the U.S.-India trade deal is big news. Could be $500 billion more of trade with India. It's an initial framework. The details are lost. We don't really know them. It looks like they may halt, expected to halt Russian oil imports. Right. Maybe they start using U.S. That seems to be the way people are looking. But more to the point, they may be actually taking Venezuelan oil.
Right.
So, a lot of potential positives. As I mentioned, with the U.S. manufacturing, give me another month of a plus number like that, and I'm going to start really latching into it, that, the dream is beginning to come to fruition here. But right now, it's kind of like, okay, it's good. Do I buy into it deep? No, you can't. You really got to wait. And that's what I think we're in. We're in this waiting transition between Jan and March. And let's see, in April, I think the dust starts to settle and we start getting a lot more clarity in the U.S. economy. So right now, you want to be buying dips, but also selling your rip, as you always
Good Lord. As you said that, Steve, AMD, I like this this pickup down here for a lot of people. It was down about 15% this morning, now down about 11. There's a nice pickup here. They're rounding bottom there. I like that.
Yep.
Yeah, I think you're right. I like picking bottoms. I know that's an old adage, don't pick bottoms or pick tops, but I do like it because I like to find, those times when you feel like stock has really done its thing and try to maximize it. I understand that that's an old silly adage, but if you look at AMD, technically it's, look at that.
Yeah.
If it was a daily chart, 1, 2, 3, 4, higher bottoms. And we know AMD ain't going anywhere because Lisa Su and the CEO of NVIDIA are cousins, so they're friends.
And their earnings were good.
Very good.
Forward guidance was a little sketchy, but are we going to be trading on forward guidance, or are we here and now? Look at what's going on. So there could, anybody giving forward guidance right now, let's look back over the last 3 months. You had government shutdowns, you had all sorts of problems. You didn't have trade deals. The Supreme Court's going to rule. So, of course, everybody's kind of like, whoa, looking back on the last quarter, because that's what we're getting. We're getting last quarter's results. We're getting the year-end results. So, you've got to go with the actuals, and the actuals were quite strong. That's why when you see these moves, what is it? It's knocking the weak longs, those who are, trading right here now.
The weak hands, baby.
Exactly.
As we called them because we call them in the old days, weak hands. Look, I think that what could get people to change their theory and thesis? I mean, I was at a bar the other day and someone said, "Well, I don't hold anything more than an hour." I'm like, that's not even. What is that? Okay, I get it that I just traded less than 7 seconds, but when I look at the markets, the majority of almost all of my accounts are long-term accounts. People don't have long-term accounts anymore.
I'd had a friend, a very dear friend, and he asked me to mentor him, a young guy. I said, okay. Back in September of last year, I said, what do you like? He goes, well, I really like tech. I said, well, which company? So he gave me 5 names, and I said, great. I said, take an amount of money, let's call it $10, and put $2.50 in each one of them. Now, you like to day trade? Fine. Day trade away. But buy them and hold them and invest in them. So the year's over, and I said, well, how have you done? He goes, well, I was not too bad. In my day trade, and I was up about 6%. I was like, wow, that's not so bad. That's pretty good.
For a starter.
I said, by the way, that long-term account we talked about, how's that? He goes, well, that's up 38%. I said, okay, well, there you go. Which way should you be doing? Should you be churning and burning, churning your wheels all day long, or should you be looking for opportunities like an AMD here and opportunities to buy and step aside? And I'll catch you in 3 more months. Let's see how we do.
And you started off by saying, what do you like? Meaning that you gave them the opportunity to buy what they like because they already know what they like. That's what I always say. Buy what you know, buy what you like, because you know what? There's a reason why you like it, and there's a reason why people are buying it. Yep.
We know that, Steve, because the most successful trader in our lifetime has been Warren Buffett. And Warren Buffett, would go in and he'd say, hey, this drink tastes good. What is it? Coca-Cola? Let me buy it.
Still drinks it today, every single day.
Right. I like having Burger King. Boom, let me buy that.
James is talking about Palantir here this morning. I agree, James. For those of you who don't know, I was a big Palantir fan at 35. I don't like it here. I did not like it at 200. I mentioned that on Schwab Network on the floor about a few months ago. I will be back there, I think, in a few weeks. Actually, I think I'm going to go back up to New York. 149.66. We might be getting a little closer here to bottoming out on Palantir with their numbers and what they're building and doing. I certainly would not be shorting Palantir here. If you're longer term than the process here, they're still working through their AIs, as everybody knows here. And the problem question is, does Amazon and with Anthropic and Claude, do they take over some of the healthcare issues that I've been talking about, where Palantir needs to move into and get out of just the government side of things? I think that's the case. I could definitely see buying some Palantir down here, though.
Yeah, and I like the company. I'm long. I have it. I've sold a chunk up higher, but I'm not using my core position. Recently, I've begun to nibble at the bottom here and reestablish. Okay. Again, in my world that I look at, as you like to call, Steve, in my thesis that you have to have when you trade, if you're going to be an investor, this company is, at the forefront center of everything that we're going to in the future. They are heavily involved in the government, but, keep in mind, they're proposing $1.5 trillion defense budget. Yeah. Do they get that number? I mean, they're at $990 billion now. If they do, well, guess what? Palantir is not going away. It's right there where they need to be. So, the Michael Burrys of the world scared the bejeebers out of everybody in this, and now they're going at it again. Look, Michael Burry got a good call. He got one right. Give him credit for that. Love the movie. But, you want to trade that way, you're going to miss the whole boat because the conditions are completely different this time around. And, he's fixated on his idea. And he's had a great call, and I give him excellent credit. He does point out some things you should always listen to. You want to listen to everybody, but him, the Big Short, thinking that Palantir and Nvidia and the whole things are going to come apart is missing the bigger picture.
And as you said that, Steve, I bought a starter position in Palantir. What does that mean? It means a 10% of what I want to buy. So I will start making positions. I think you're right. I do like this. If you look at a daily chart, we're getting into those numbers way outside of the numbers here. A lot of support down in here. I don't think it's going to crash. I think you're starting to see the turnaround here. So and as Steve just said about this younger fella that he was dealing with, split it up. So I bought a couple hundred shares here, nothing major, just to keep my eye on it. So,
Steve, I love the way your strategy worked there. I mean, 10%. What is that? That is exactly the way you need to invest, because when you invest, you're walking up to the pool and you're dipping your toe in it. Is it warm? Is it cold? Jump in. And when you jump in, you never jump all in with your whole position. You jump in and taste it. You get a dabble. Is it warm or cold? I don't know. I'm in it now. Oh, it's cold. Okay. Then your next trade is to get out.
right.
But with 10%, you've ventured and lost nothing. So, that's why I always say never enter into anything with a full position.
Silver's taking a quick slip here. Was it $92 an ounce there? Now down to 89 an ounce again. So profit taking again on the open. I thought that was going to happen. I'm not playing silver right now, Steve. I felt like we took it up, took it down, took it back up, and that roller coaster, as I call it, I'm done with that roller coaster for a while.
Yeah, 35% move in one day, historic move. Remember, historic. You can play the mean reversion, as many of us did, buying the bottom. But you know what? When we had $5, $10 in that trade, we were out, because anything that moves like that, there's reverberations.
Right.
There's a reason things do that. And we're not privy to that. There's a lot of speculation and rumors. Just, go on your accounts and look at why silver came off. But without knowing that fundamental reason, it's risky to play that. So in and out, unless you're a long-term investor, then, you're back into levels that you should be looking to buy. If you get down to $60 to $80, that's where you begin to dabble and build a position if you don't have one.
So what do you say to, and the news just came out a little bit here, that Jeff Bezos is now ordering deep cuts at the Washington Post, the WAPO. Thoughts on that?
Yeah, okay. Walk around, go to a restaurant, go to a diner, go anywhere. How many people are reading a paper? Everything's online. So
I can tell you that in my own phone, you can see I've got Wall Street Journal, the New York Times, WAPO, Barron's, CNBC. I mean, I do keep my eye on those, and of course the WAPO is in there, and my fave, NYSE TV, which I'm on all the time. I do have but I think you're right. I don't think we need as many reporters as we do.
Steve. And Steve, those online, they're hefty. They're expensive.
They are.
I ended my Wall Street Journal because I was like, do I use it enough to justify that much money for that subscription?
Right.
And okay, if you want instantaneous news, and I would have news.
And I use, believe it or not, folks, I actually use Apple News. I mean, I have access to all of that right now, right? So I've said it all along. That's why we're building Quasar Markets, right? One subscription gets you everything, right? And I think that's the key here.
I agree totally, Steve. And I think, Quasar Markets is going a long way to bring these type of tools to people. Okay, do you want that news the second it comes out? If that's the way you trade, then you've got to pay up for that data.
That's right.
But if you are, okay to sit and wait a few minutes, then don't pay those amounts. And I think that's why he's looking at the Washington Post. And also, I think he's reading a lot of the tea leaves, the sentiment within the country. And, I'm not going to get political, but the biases that have been in a lot of the media, it's, well documented, and they're not getting new subscriptions to justify. So, yeah, that's a good business decision, I would think.
No, I love it. I love it. All right, we're about 10 minutes down to the top of the hour here. Anything you want to say, Steve? I tell you one that I am looking at. It is snow. I know Snowflake here has been beaten up. Top of that range was 280.76. We're now at 164. So I get it. Software company. I understand it. Snowflake does a lot of very packaged software, obviously. But we're getting back into those numbers where we're starting to see a little bit of protection here, and the buyers are in here. So I do like Snowflake here down here. And they are partnered with OpenAI too.
That's right, Steve. Another one that's been just absolutely beaten up and mauled. As an investor, you're looking at the future, and this is another company that's going to be involved in that space. Picking a bottom. I always say you're going to step in front of a freight train and ask it to stop. Good luck. So your 10% rule, that's the way you have to look at these. This is an opportunity as people are unwinding and getting out, and the weak hands are dropping, to start building a position. I'm watching Banamex, Banxico, the Mexican central bank. They have a meeting, I think, tomorrow, Feb 5th. And they're expected to be unchanged at 7%. Now, we've talked about Mexico being a magnet for loose money in North America, rather than being in the U.S. under the, dollar decline, dollar debasement argument. Mexico has been a prime recipient. They're looking like they will make a dovish pause after 12 consecutive cuts. I don't know. That's something to keep in mind. Watch the MEX carefully. As the MEX begins to trade, you could begin to see a lot of flows out of MEX into the U.S. That's my call. And dollar CAD. I really like dollar CAD on the upside. I'm looking for a test of the 140 level. And the yen this coming weekend with elections, the yen has been weakening at 156.5 right now. I do think you could see a play back up to 157, 158.
Well, I like that a lot, Mr. I like that a lot because that's a lot of sushi and sake for me when I'm in Tokyo and if next month. So I like that. Keep that rolling.
Interesting place for you to go next month after this election. Most likely, you're going to see, the prime minister win big. That seems to be the prevailing logic, the Japan first idea. And if that happens, I like Japan, Steve. I know you've talked a lot about overseas investing.
Yeah.
I think it's EWJ is a great ETF. And I would look at that because I also think dollar yen could top out very quickly if she wins big. So I'll be out of my longs on Friday. I'm not going to play it into the weekend because most likely she's going to win big.
And that makes a good point. Steve, you and I, we moved our money overseas a long time ago. I moved to Japan, a lot of investment at the beginning of the year. And of course, we've had a nice run. I have bought several mutual funds. I did not buy EUWJ, but mutual funds in Japan. I thought Japan was going to be the hot player here. And we're definitely seeing that now. You can see look at this. Look at all the funds just flying high on Japan.
Yep. Yeah, it's a good opportunity because, one, they're increasing defense spending. When you say that, you have to look at Japan. I think Japan spends the second or third most in defense in the world. So they spend a lot. They have a very strong, insulated industry manufacturing base. Yeah. Japan is a very good place. They do things the right way. and they are well involved and ahead in robotic technology and
Yep.
also in the overall technology space. So they would be a primary winner in my thesis of the future growth, and they're aligned very closely with the United States.
And Palantir slipping a little bit here. Okay, Steve, it's top of the hour here. We're going to let you go, but we will see everybody back here a little bit later. We've had some great interviews over the last few days here, and look forward to seeing everybody at the end of the day.
Have a great day.